About 2 months ago, I sold all my shares of Evolution at a massive loss. The average price I sold was around 536 Swedish krona. Today, the shares are above 600 Swedish krona. In other words, it seems that I sold at the bottom. We are going to talk about whether I made a mistake selling Evolution and where I see this company going forward. And why did I sell in the first place? Because if you just look at the fundamentals, P ratio of around 10, they decided not to pay a dividend anymore. They are going to buy back more shares, which is going to create more value for shareholders, especially for me, who has to pay 30% withholding tax on Swedish dividends. So it makes more sense for the company to repurchase shares for me as a shareholder, and it will create value in the long term. But there is one thing that I believe that I missed, and many value investors investing in Evolution or any other companies that become value trap that we missed. And that's the story. In the case of Evolution, the story just got worse and worse. When I invested in the company, there were some issues. There were, for example, strikes in Georgia. There were the growth issue in Europe, which was not growing that much anymore. Things were changing. It's okay. It's a company. There are always challenges with any companies. But the issues kept getting bigger and bigger. And every time there was a new issue, I had to learn about it, and it seemed that I was understanding the company even less than before, which is not something good if you're owning the company. For example, in Asia, there's cybersecurity issues, people are stealing their content. And it's not someone in a basement stealing their content. These are sophisticated thieves. How do you deal with that? It seems so big of a problem in Asia. In Europe, there's the ring fencing issue. They had to lower their revenues, cut deals with unregulated companies. How do you keep growing when there are so many unregulated companies now? This is an issue. There's a license in the US, and then there's the issue Playtech trying to spy on them and fake information. The more you read about the company, the more you see these issues. It doesn't mean that it's a bad company, but to overcome these issues, I don't know how they're going to do it. And this is what changes the valuation of the company. It's not really the company repurchasing shares. Yes, once the announcement is made, the stock price might go up. Dividends announcement also makes stock prices go up. But the story has to change in order for something to happen to the stock price. Adobe is buying back shares, but the stock price is still going down because the story hasn't changed. And even for Adobe, the story got worse. Same for PayPal. I talk about this in an article about why do we own value traps. In that article, I mentioned that the story matters the most. It's not whether the company is repurchasing shares, because if it is a company with high liquidity, it doesn't really matter if they are going to repurchase shares. It doesn't mean much to bringing up the price. People say that when companies buy up shares, they are the largest buyer of shares, so they're going to bring up the price. It only works if the stock has low liquidity. But if the stock has high liquidity, like PayPal, like Adobe or Evolution, it doesn't really work. It works when things change. If, let's say, I'm not talking about, let's forget PayPal and Adobe, let's talk about Evolution. Let's say they start growing revenues at a high rate again. And then the market might say, we are not willing to pay 10 times earnings anymore, we are willing to pay 20 times earnings. But because the number of shares are lower, the earnings per share are also going to be higher, which means that the effect of those multiple expansion will be bigger on the stock. But for this to happen, revenues need to grow, earnings need to grow, which is not really happening right now. I'm not saying it will not happen. It might happen, but I don't know how, I don't know when. And I prefer forgetting about it and moving on. It's an investment I made over 2 years ago. I invested also in FTJ, which was a mistake also. And I have shares as an investor. You might say 2 years is a short time, but it's 20% of my investing career. And I'm still evolving as an investor. Actually, one of the best investments I made was in the casino industry. In 2020, I invested in Caesars Entertainment. When it was being acquired, it was an arbitrage deal. I think I held it for only around 3 months, but it was one of my best investments ever. The market was recovering, it recovered. Why I'm saying this to you is because at the time, 3 months, that's a short time. But now I have become an investor that I want to invest in companies that I believe in for the long term. That these are compounders. Evolution might be a compounder, but I don't like the fact that I'm owning a company that is stealing with gambling for the long term. I'm not against people gambling. It's their money, they can do it. But I prefer investing in companies like Wise, companies like the local, that is actually bringing something positive in the world. I don't mind owning Evolution again, let's say if there is some arbitrage or something like that. But to hold something for 5 years, for 10 years, for the long term and see it compound, I prefer now owning companies that are aligned with my worldview. You might not agree with my worldview, you don't have to. I'm not saying that I have the right one, you have the wrong one. It's not like that. I prefer owning something that is doing something that I cannot do myself, but I wish I could do it. Like what Wise or the local is doing. Or even something like Celsius. It doesn't have to be technology. Speaking about Celsius, the stock now is lower because of the fear from Costco. I will recommend you watch this video next. Have a nice day and goodbye.